According to Goldman Sachs options research team, buying options on retail stocks ahead of Black Friday could make for a great trade. Do they have a point? Welcome to Trading Nation. I'm Eric Chemi, joined by Jonathan Krinsky of MKM Partners and Dennis Davitt of Harvest Volatility Management. Dennis, let me start with you. What are your thoughts on Goldman's note, equity options on these retail stocks?
Yeah, it was an interesting read, and I'm a big fan of John Marshall and the guys at Goldman that put the note together. But it kind of gives me a little bit of pause about buying volatility on these retail stocks that they're talking about going into going into Black Friday. Nike and Under Armour are two that they highlighted. Under Armour is a stock that's gone through a tremendous amount of volatility lately, so the options are priced for a volatile environment. They're looking at Kroger too. If you look at the chart of Kroger recently, it's made a complete round trip, and those options are priced really high. What the point I'm trying to make is options that are beneficial to buy before periods of volatility is when people are not looking at high historical vols. So it's kind of like the hurricane has just passed through and now you want to go buy insurance on these. The options are priced for a volatile time. They're fairly priced. I ordinarily would sell these options. The fact that Goldman thinks you should buy it, I'm kind of in the middle on this. I'd rather wait on the sidelines. I really don't have an opinion on whether or not I definitely don't want to buy these options. I would avoid getting short any optionality if the guys at Goldman think they're inexpensive.
Jonathan, you're bearish on one of these stocks. Give us a little bit more about how you're looking at these things.
Yeah, so of those names, Under Armour is the one that stands out to us as far as potentially having the biggest move, and the move in our view is likely to be the downside. If we look at the 2-year chart of Under Armour, we can see it's been going through this pretty big distribution pattern, topping pattern, whatever you want to call it, and then in October it had the big gap down below support of $33. And what really tells us that it's probably going lower is the reaction to that move down. The stock has done nothing. It's just consolidated. That tells you that it's just working off oversold conditions, and it's probably a continuation, setting up for a continuation of the downtrend as opposed to any type of major bottom. And then if we look at the longer term chart, for those that think it may be oversold or overdone to the downside, again, this is a stock that was up 3,400% from its 2009 lows to its 2015 highs. So it's pulled back. Yes, it's pulled back a bit, but given the chart pattern, we think there's probably a significant risk that it could go lower. So if you're looking to play for an expansion of volatility, our bet would be Under Armour to the downside.
What's funny about Under Armour, because just at CNBC, there's so much discussion about the company, about the founder, about their big endorsement deals. They're known as like the hot brand, right? They're the guys that are going to take down Nike. They've got Steph Curry. They got Tom Brady. And then you look at the picture of the chart, and it's not quite there, right? They've had that run. Yeah. And so what happens going forward? Go ahead.
One of the things you want to look at in Under Armour, though, Under Armour's kind of matured into the space. And now they're losing market share. If you look at a chart of Adidas, Adidas taking a great deal of market share away from Under Armour and arguably Nike. So it's an area where they're now just taking market share from each other. And I agree with what Jonathan says. I think there's potential move to the downside. But if you look at the cost of buying those options, you're really going to have to see a massive move to the downside where owning puts on Under Armour is going to pay you any sort of dividend.
And then, Jonathan, just really quickly, if not necessarily going with the note that Goldman is saying to buy a lot of these straddles and to get long a lot of this vol, do you think people are just better off staying on a single direction instead of looking for vol? Just either pick your bull cases, pick your bear cases, rather than trying to play both sides of that trade?
Yeah, I mean, we're generally proponents of sticking with the primary trend. So in the case of Under Armour, that would suggest lower. Nike is probably in a similar camp. And if you're going to look for upside calls, more often than not, you're going to get paid by stocks that are already in uptrends. It's very difficult to try to buy upside calls in something that's clearly moving lower. It can work, but the odds suggest that you want to stick with the primary trend, which is why we'd stick lower in Under Armour.
Well, there you have it. Sticking with the primary trend. Thank you to both Dennis and Jonathan for coming on here with Trading Nation. Have a great day.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.